Dear viewers, this is part 3 of our series on capital gains tax on sale of immovable properties. In part 1, we discussed about how to compute your capital gains. In part 2, we examined what all the deductions that you can make and reduce your tax burden when you are paying the capital gains tax. In part 3 now, we are going to discuss what exactly is the amount of capital gains tax you have to pay when you sell your immovable properties. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, practicing financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, we here at NRI Money Clinic are trying to solve many of the problems faced by the NRI community. We are in a position to solve the problems faced by this community here in India. But our NRI community has lots of questions, lots of problems in the countries where they are living. If you are a professional who is working in US, Canada, UK, Ireland, Eurozone, Singapore, Australia, Japan, Hong Kong, China, or any other countries where you have an NRI community, you have a chance to appear on our channel. If you are one of the professionals, chartered public accountant, a tax specialist, financial planner, or advisors in any other financial field, then probably we have an interest in you and you get a chance to appear on our channel. If you are interested to appear on our channel to discuss the problems faced by the NRI community in your respective countries, please send us a WhatsApp message on the number shown here on the screen. We'll get in touch with you and we explore the possibilities of associating with you. Dear viewers, to talk on the subject of capital gains tax, we have in the studios my eminent faculty, practicing chartered accountant, Sriram Rao. Sriram Rao is a well-known figure here on this channel, an expert on NRI affairs, an expert on direct taxes, partner at Nitin J. Shetty & Co., a man who has to his credit solving the tax queries of many people who are spread across the globe. Mr. Sriram, welcome to the show.
Thank you.
Mr. Sriram,
Yeah.
in part 2 we discussed issues pertaining to what deductions a customer can make while paying the taxes.
Yes.
As an afterthought, one more question came to my mind, so I'll be asking that question right now. You said when a person sells the property, he can buy another house and he can get an exemption.
Correct.
So our community of NRIs, they live outside of India.
Correct.
They are asking you one question now. If I buy this house or another property outside of India, will the exemptions limit be claimed or it has to be within India?
I think you are referring to section 54 and section 54F deductions, where if you are investing in a new house, residential premises, you can claim deductions that we have discussed already in the video. So in that regard, both these sections specifically say that the investment should be made in a residential premises in India, which is situated in India. You can't purchase a house outside of India and claim that deduction. That is not possible.
So if anybody of you have got a question in my mind that okay, I'll buy it in US or Middle East or somewhere else, that's not allowed. You have to buy an alternate property in India only.
Yeah, right. In order to claim the deduction.
Right. Yeah. So now we have a fair idea about how to compute the capital gains, and we also have an idea what are the provisions which are available where the capital gains can be reduced.
Correct.
In this episode, let's discuss what's the actual amount of taxation that they have to pay. Can you bring to the notice of our viewers what could be the taxation which they have to pay on the sale of immovable properties capital gains tax?
Yeah. Now, as we have already discussed, there can be two types of capital gains. One is short term and another is long term. When it comes to short term capital gain, the same is taxable at a slab rate. So every individual will get a slab rate up to 2.5 lakhs. There is no taxes in India. Above that there will be 5% tax, 20% tax, 30% tax, or if you are coming in the new regime, there is other tax slabs. So accordingly, one has to pay taxes based on how much is the total income that they earn. So that is a simple. When it comes to long term capital gain from sale of immovable properties, the rate of tax is 20% flat. So
okay, that is after they have taken out indexation, everything, and they have arrived
Yes.
what is the capital gains
Capital
on which
gain.
they have to pay taxes.
Yes.
On that you say it is 20%.
20%.
Right.
Now to that again it might get surcharge and education cess might get added. So if the income is total income, if the total income is below 50 lakhs, then it is I can say 20.8% will be the capital gain taxes. If the total income is exceeding 50 lakhs but it is less than 1 crore, there is a 10% surcharge. Because of that, effective rate of tax will become 22.88%.
Okay.
And if the total income is above 1 crore, effective rate of tax will become 23.92% in that case.
Okay. So it's quite simple that way.
Yeah.
Ms. Shriram, I have a small follow-up question for you. Now an NRI has sold the property and it has resulted in a long-term capital gains on
Okay.
which he has to pay the taxes. Because he is an NRI, he doesn't have any income in India. Now as per the income tax rules, the first 2.5 lakhs is exempted. Now can he take the first 2.5 lakh exemptions against the basic limit and pay taxes applicable on the remaining, or is it permitted or not permitted?
Okay. See, one simple thing one has to understand. Now, as I told, short-term capital gain is taxable at a slab rate. So, considering that, this basic exemption limit is applicable against any short-term capital gain what he has earned.
Only with respect to short-term
Yes,
capital gains.
yes. Long-term capital gain, whereas it has to be taxed at a flat rate.
Okay.
There is no slab rate applicable. Even if income is above 1 crore or something, it is still the rate of tax is 20% plus surcharge and cess.
Okay.
So that being the case, they want it to be taxed from the basic 1 rupee itself.
Okay.
So the basic exemption of 2.5 lakhs is not applicable when it comes to a long-term capital gain.
This is with specific reference to sale of immovable properties and the resulting capital gains.
Yes, yes. And especially if I have to say, and as an add-on, any income that is earned in India, especially by the NRIs, or even certain incomes which are earned by residents also, if that income is taxable at a special flat rate of taxes, like 10%, some have some 15, 20, 30% and all. So if they are taxable at a special flat rate of taxes, then for that there is no basic exemption limit applicable. So
Okay.
from the rupee 1 itself it is taxable.
Okay. Right.
Yeah.
Now let's look at the TDS obligations. NRI buys the property or NRI sells the property. What is the TDS obligation on buyer or seller, and how does it vary if he is a resident or if he is an NRI? What's the thing that people have to keep in mind?
Okay. Now it is quite simple. The thing is, if the seller is an NRI, so when it comes to TDS, one has to see from the point of view of income earner.
Okay.
The income earner is the seller.
Right.
So when the seller is an NRI, non-resident, or a OCI for that matter, at that time the rate of TDS which is applicable on that particular transaction will be higher.
Okay.
That is the first part. So higher than what it would be for a resident seller.
That is, if the seller is an NRI, TDS is higher.
Higher.
Right.
So that is one part of it. Second part, it is the obligation of the buyer to deduct TDS whenever he makes a payment to the seller on purchase of immovable properties.
Okay.
And at that time, obviously the buyer would know what is the holding period of the seller, because he would verify the documentation of purchase by the seller. So if that period is more than 24 months, then obviously it is long-term capital gain for the seller. So at that time, the buyer has to deduct TDS at a rate of 20% plus surcharge and cess, what I mentioned already. So at that rate he has to deduct TDS, applicable rates,
Okay.
on the entire sale consideration.
On the entire sale consideration. Let me summarize my understanding
Yes.
here. If the seller is an NRI, okay, he has an obligation for TDS.
Correct.
But the TDS has to be done by the buyer.
Buyer.
So at the time of he paying to the seller, which could be an NRI, he has to deduct the full 20% plus
yes.
surcharge
Yes.
as TDS and remit to the government.
Yes.
Right?
Yes.
So, and this 20.98 is not based on what is the capital gains
No.
which has resulted, but this amount is based on the sale consideration.
Yes. Yes.
Total, if you have sold it for 1 crore,
Yes.
whether there can be capital gains or not, or it could be just 20 lakhs capital gains,
Yes.
but the TDS has to be 20% plus surcharge amount based on the sale consideration.
Yes, on the 1 crore, he has to deduct 20 lakhs or something. So
Right.
like that.
Right.
So if it is a short term, then again 30% would be the rate of.
So if the capital gains is short term, so
Huh.
it is 30%.
Yes, obviously.
Plus
Plus
surcharge.
surcharge and cess as applicable.
Right.
So it is quite a burden if we see from the point of view of the seller,
Huh.
because he might not even earn that much of profit sometimes, but that much TDS would get withheld in his cases.
Okay.
Because another angle, if you have to see from the point of view of the buyer, he has an obligation, that is the rule, that on gross amount whatever he is paying, he has to deduct TDS, that's it. He is not in a position, or neither is having any authority to calculate what would be the gain for that particular person.
Correct.
So he is not.
So it is a preventive measure.
Yes.
I will deduct at the highest level, or the government says deduct at the highest
Yes.
level. Let them file the tax return, and
Yes.
if there is excess paid, they can claim it back.
Correct.
As simple as
Absolutely. Absolutely.
that. Right. Mr. Sriram, in yesterday's episode or day before yesterday's episode, we discussed this issue. The government notified rate is higher. The sale consideration at times can be lower than this, right?
Yes.
That might be a possibility.
Yes.
Now buyer has an obligation to do the TDS.
Correct.
My question to you is,
Correct.
if the circle rate is higher,
Hmm.
the actual sale consideration is lesser than that, whether it is 10% or whatever it is. Now what is the responsibility of the buyer to do the TDS, based on the circle rate or based on the sale consideration?
This is a very litigious issue as on date, I would say. To a certain extent, when the seller is a resident, this issue is settled by way of a recent amendment in the Act. However, when the seller is a non-resident or OCI for that matter, there is no prescribed rules, especially in this issue. However, one need to see from the point of view of the TDS deductor, that is the buyer. So when he is deducting, what is his obligation? Rule says, correct, whatever is the amount you are paying or whatever the amount you are crediting as paid to that particular person, on that you have to deduct TDS. So the amount paid to that particular person is a sale consideration, not the government rate. Government rate may be a little more than 10% or whatever it is, and he might get taxed on the higher rate, which is government rate, rather than the sale consideration.
Right.
Even at that circumstance, the buyer has the obligation to deduct TDS only on the sale consideration per se, not on the government rate, even if the government rate is higher, and even if the government rate is more than 10%. Because if you have to see, that is only a deemed consideration.
Okay.
There is no consideration passing from the buyer to the seller.
If this is what you say, the buyer has to check
Yes.
From whom he is buying, whether he is a resident Indian or whether he is an NRI.
Correct.
Okay. So the TDS obligation differs from a resident Indian to a NRI.
Yes.
Make sure from whom you are buying.
Correct.
If he is an NRI, whatever could be the sale consideration, you pay a TDS depending on the sale consideration. Don't bother about what is the circle rate.
Perfect.
So two things to be checked when you are buying the property: from whom you are buying. If he is a resident, there is a different TDS. If he is an NRI, that's the highest tax rate.
Yes.
You don't have to worry about whether it's a circle rate or whether it's below or higher. Whatever the amount you are paying him, the applicable TDS you deduct and pay it to the government, and your responsibility ends.
Yes.
Right?
Yes.
One question that comes to my mind is, I don't know whether it's right or wrong, whether it's a problem of NRIs, whether it is insensitivity of the government. NRIs many a times don't pay taxes. Government wants to recover its taxes. So it gets into a hard-breaking mechanism where you say that you pay all the TDS. It becomes quite cumbersome at point of time. Has government really not thought about it, or is there a mechanism where government has put in place, instead of doing this TDS, why don't you do a capital gains calculation, get a permission, and you get a notification from the government, and can we not solve? See, if it is a small property deal, it's okay, but there are cases where it runs into multi-crore kind of a thing. It becomes very, very problematic, this huge amount of money getting deducted as TDS. What's the alternative for that?
Yes, there is a remedial measure, I would say, from the point of view of the seller. So seller can apply to his jurisdictional income tax officer stating that, see, this is the sale agreement to sell, which I have entered with a prospective buyer. He has agreed to pay me so and so for that particular place which I am going to sell. This is a long-term capital gain because this is what I have bought and documentation has to be provided. You apply to that jurisdictional officer along with all the documentary evidence. There is a form called Form 13(1)(3). So in that you apply to him and say, my total tax liability on this will be only so much.
Okay.
Hence, if total TDS is deducted at a higher rate of 20% or 30% as the case may be, it will be genuine hardship to me. So in that particular circumstance, please look into the evidences which I am providing, and based on that provide a lower deduction or a nil deduction certificate. If there is a capital loss, it can be capital loss sometimes.
Perfect.
So at that time you can also ask for a nil deduction certificate from the income tax authority.
Okay, that is, once you have done a sale agreement, you can apply.
Yes, it is before the
Execution
of registration of the
perfect.
This one.
But how much time it will take? Will it be a smooth affair? Will it be a, the government moves its snail space?
It will normally take 30 days of time.
Okay.
Normally it will, if all the documents are ready with you. There are so many documents which is required for that.
Okay.
So if all the documents are ready with you, then it might take 30 days of time.
Okay.
So if the documents are not ready, it might take some more additional time, depending on when you submit the final set of documents.
Okay.
And sometimes depending on understanding of the officer, if he wants more document, he may call for more documents also. You have to substantiate yourself why your capital gain is only so much.
Okay.
So you can provide all the information to him
Right.
and avail a lower deduction order.
I understood this part.
Yeah.
So there is a mechanism to predetermine your tax liability, and the department will give a certificate to that effect. What should be the tax that to be deducted or a nil tax?
Correct.
One issue that is there in my mind. These days you have got the color xeroxes, and anybody can come and say that this is the government order.
Correct.
As a buyer, how will I safeguard my interest that whether it is genuine or not? Can such orders be seen in the income tax website that the government has passed this order, or the PAN card numbers are given? Will it reflect there? How will I doubly make sure that I am not liable to pay the TDS?
Yes. Now this is a very practical question and very relevant also. Now, when the seller is applying for a lower deduction certificate, he has to give his identification, that is his PAN, okay, to which the buyer has to deduct the lower taxes. That's what you are paying to the income tax authority. At the same time, you also have to link the TAN, that is a tax deduction account number, TAN of the buyer, from which he would be actually supposed to remit the TDS on account of this particular seller. Okay. So both these are getting linked. When the order is passed by the prescribed authority, he will be linking the PAN of the seller with the TAN of the buyer.
If the buyer doesn't have a TAN,
he has to apply TAN compulsorily.
so at the time of buying a property, you have to first apply for a TAN,
Yes.
get your TAN number, and then deduct the TDS.
If the seller is a non-resident, then having a TAN is compulsory.
Okay.
Okay. If the seller is a non-resident or OCI, having a TAN for deduction of TDS is a compulsory. Without that, even application cannot be made. And this whatever the certificate is given for lower deduction, it will be specified for a particular amount. What is the rate of TDS to be deducted, or the total amount of TDS which needs to be deducted by the ultimate buyer.
Okay.
So, and it will be specific for that particular transaction, and it will be specific for that particular period, as well as it will be specific with that linked to that particular PAN and TAN. It cannot be linked to other people at all. And in the TAN login of that particular buyer, this certificate will automatically get reflected.
Okay. Now you talked about the TAN registration. Now the TAN registration is required only if he applies for predetermination of tax liability, not otherwise, right?
Yes, obtaining a TAN by the buyer is required only if he is liable to deduct TDS.
No, what I am asking is, suppose I am the seller, okay, and I am an NRI, and somebody is a buyer. He has a liability to deduct TDS from me.
Correct.
If I am not applying for a predetermination of tax liability,
Huh.
does the buyer have to do the TAN? It's not required, right?
No, it is required.
Even
compulsory.
otherwise also
Yes,
it is required.
because for if you are not applying as a seller, you are not applying for lower deduction certificate.
Huh.
The buyer is supposed to deduct TDS at 20% or 30%, as the case may be.
That's what I am telling. If he is deducting full amount,
Then also he is required to have TAN.
okay, so wherever a buying happens from an NRI, a TAN has to be applied.
Yes,
Then only you can buy it from an NRI.
Yes.
Not otherwise.
not otherwise.
Okay, so this is another requirement. So
Yes.
whenever a person is buying from an NRI, you apply for TAN. TAN
Correct.
stands for
Tax deductors account number.
tax deductors account number.
Correct.
Okay, fine. Mr. Sriram, now when a property is bought and sold, huge amounts of money get involved. Now we are saying that the buyer has an obligation to deduct the amount.
Correct.
How does the seller know that the deducted amount is paid to the government? Tomorrow if he doesn't pay it to the government, how will the seller be very certain that the responsibility has been discharged? Finally, whether he deducts TDS or not, the obligation of taxation is there on the seller,
Yes, of course.
right?
Yes.
So how is the system is protecting the interest of buyer and the seller? What obligations they have for each other?
Now, first of all, at the time of registration of this property, it is mandatory for the buyer to produce the challan for payment of TDS. So this is in particular, and whenever he deducts a TDS, he has to deduct and make the remittances to the government exchequer under the TAN number what he has got, the buyer.
Hmm.
So that he has to produce before the registering authority, and it will be mentioned in the registered documentation.
Okay.
Okay, this is the challan part of it. Now, just by making the payment, the buyer is not discharging his complete obligation towards this TDS. Now, after this, there may be a time gap, because what happens is these challans, whatever he is paid, that has to be put in a particular form, and it has to be linked to the PAN of the seller.
Okay.
Okay. Now the seller being an NRI and the TDS has been paid under a TAN, this has to be done by the buyer in form 27, which needs to be filed by that buyer right after the end of the quarter in which he makes the payment of TDS.
Hmm.
And every quarter is ending on June, then in September, in December and in March. So right after that he will get an opportunity to file the TDS returns. In that TDS return in form 27Q, he has to file that, saying that so and so is the amount which I have deducted from so and so person, and he has to submit that form 27 online. So once he does that, it will get processed, and automatically this transaction will get reflected in 26 AS of the seller.
Okay.
Similarly, in the AS of the seller also it will get reflected.
Okay.
Okay. Along with that, the buyer has an obligation to download, once this processing is done at the back end by the government authorities, which will happen within 7 to 10 days, a form 16 will get generated in the online portal. That needs to be downloaded and provided soft copy of that to the seller.
Okay.
Okay, buyer has to provide the soft copy. So these are the obligation of the buyer, and the seller can make sure by obtaining a form 16 that the buyer has discharged his obligation towards TDS.
Okay. So the money will not be misused, because before registration the challan has to be paid and the money will reach the government.
Yes.
That aspect is clear.
Yes.
Now the rest is that it is to be attached to his PAN,
Correct.
which can be done through form 16
Yes.
and form 27F.
Yes.
When the TAN, the person who has the TAN, the
TAN,
buyer,
yes.
has to file his returns
TDS
at
returns.
TDS return at the end of the quarter.
Yes.
Then it gets reflected against the PAN, and
Yes.
the responsibility of paying the taxes
Yes.
for the seller gets discharged.
Discharge. Yes.
Right. One another question that I have in my mind now is, some properties are held jointly,
Co-ownership.
co-ownership. How does this obligations and TDS works? Whether they have to file it as a joint or at individual levels, how does the system work in that case?
Now, if there are more than multiple sellers, then the buyer has to deduct TDS to each seller as such and remit it to the government, and again file a TDS returns, but the TDS returns will be one for him because he is a one buyer. But if there are multiple buyers, then each buyer has to deduct, and each buyer should have a TAN. He has to individually file TDS returns. Okay, and provide the tax credit whatever they have deducted.
Okay.
So like that.
So in this case, wherever there is a joint ownership is involved, whether it is in buying or selling, the tax obligations are to be treated proportionally to the individual shares.
Yes.
So there is nothing called collective discharge of tax liabilities here.
No.
Multiple TANs may have to be opened, or multiple TDS challans have to be deducted. For each PAN number, whatever is the applicable share, that has to be discharged.
Yes, correct.
Right?
Absolutely.
Right. Mr. Sriram, it's a Herculean effort. Words cannot say thanks to you for this work. It's voluminous work. You have done your best possible to simplify things in 3 volumes, trying to simplify the whole episode pertaining to this capital gains, how to compute, how to get deductions, how to make payments, and the do's and don'ts, and what precautions that has to be kept in mind. A big thank you to you on behalf of the NRI community.
You're welcome.
Dear viewers, hope the part 1, 2 and 3 what we have done on the capital gains tax series helped you to understand every bit of information you need to know on the capital gains tax that you are liable to pay to the government whenever you sell a property. If this helped you to understand all implications of capital gains tax, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share this video with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall come back to you with yet another video, yet another topic very, very soon.
Press the bell icon for more details and subscribe our channel.